Okay, welcome back. This is a Market 101 recap here using the options analysis tool. So one of the criteria that we were looking at in class was how to look for options or screen for options that are very, very liquid. So once you're logged into the options analysis tool, you go up to the options menu. We'll go down to analysis, and we're going to look at a ranker called options slippage. Now, option slippage is a tool within this website that lets you essentially filter on a list of stocks according to sets of different criteria. Now, at first, it looks like there's a lot of things here to look at, but I'll go through sort of the main sections and then explain what kind of output you get. So the first thing you see here is there is a wizard section. So the wizard is really good because once you check one of the items, it's essentially going to predefine or preset a lot of the filters for you. So we're going to start by looking at a 2% slippage and merge removal. So what this is really going to do is it's going to go look at the option prices, the bid and the ask, and it's going to look for the prices that are essentially the closest together. So they have to be very, very close, meaning they're going to be 10 cents or so apart. We're not going to be finding ones where the prices are extremely large, like maybe 70 or 80 cents. The next thing we're going to look at is we're going to filter by options that expire within 50 days because we are trading the caller actively. So we're not interested in going too far out in time because that works against us in terms of time decay, and we want to be fairly active. Um, and then what you can do is once you set those two, we can actually just show the wizard criteria and we can kind of see what the settings are. And at the very top, there's actually another one here for stock price. So right off the bat, we're probably not going to be buying stocks that cost $1,000 a share or anything even in like the $500 range. So we can set it down to something like 50. And then there's a minimum price you can set. So we can say like 5. So if there just happens to be anything really, really cheap, we'll maybe ignore those ones at the bottom. And then the next thing we can also set up here is the total number of options. So we want things that have a lot of option strikes available. And the reason is the more option strikes available, that is probably going to mean that there are weekly options being traded on the stock as opposed to ones that just trade monthly. Because for trading it monthly, that means we have limited chances to adjust unless we go further out in time. So we want things that have lots of strikes. So I'm going to set this actually to like 1,000 for the max, and I'm going to set a lower limit of around 300. Because if we have, I know if you have stocks that have just a few option strikes trading, they're going to be in that low range, and we're probably not going to want to see those anyway. And I think the rest is good. And then the next we have to do is just pick a list. So I'm just going to pick the S&P 500. That's 500 optionable stocks that trade in volume and are very active. We'll hit search. And what should come up here is a filtered list on the bottom. And you can see what it did is it went out, applied our criteria, and came back with 13 stocks. So right off the bat, for trading purposes, these are probably excellent candidates. One because they have our price range that we're looking at, so nothing here greater than 50. They also have a large number of option strikes. You can see this one here trades at 774. Delta Airlines, symbol DAL, and it has a bid-ask spread of like 1%, 1.06. So we, right off the bat, these numbers are telling us that we have very, very liquid tradable options under the underlying stock. Whether the stock cycles around up and down enough for trading a caller or to be adjusting the hedges, we'd have to go in and look at the chart and look back in time to see how the stock behaved. But these is a good place to start. And you can see that we're capping it out here at about 1.9%. So everything here is 2% or less. And so if you wanted to take a look, we can just look at the chart. This will bring up a chart of the symbol DAL, Delta Airlines. And you can see that this one's actually quite good. It has a fair bit of stock movement up and down, cycling through more than a few dollars worth of strikes in every sort of 30-day time frame. So this is a fairly active one. and would be actually quite a good candidate to take a look at. I can go back and take a look at another one, like we'll compare the next one here, Wells Fargo. So I know this is a bank stock, and banks typically lately they kind of tend to move in spurts. The market's been quite volatile the last few months, so this has dropped a fair bit. But over in the past, it tends to settle down into a range and just moves a dollar 50 at a time. So this is one that's probably maybe a little boring, or if you're going to trade on this, you can trade it over a longer period of time in terms of your hedges, and you probably won't have opportunity to adjust too much unless there's movement there. So, this is kind of one that I would maybe stay away from or just keep my eye on it to see how it starts to move maybe in the future. And we'll just look at one more here that's a little bit different. An interesting one here is PayPal Holdings. So this is a new one, a spinoff from eBay. Interestingly enough, it does quite move quite a bit. In a month's time, you can see right here it drops quite a bit and then shoots back up. Um, Low price. I'm trading in like the mid 30s right now, and interestingly, it has very, very liquid options for a new sort of a new issue. And this one has like 640 options. So I'm just going to take a look a little bit at this one. And you can see right off the bat here, it has weekly option series, which is really good. So that means it has your monthly, March 16th, April 16th, July 16th, but in between those months, in the near months, you have weekly series that are expiring. So excellent. That is a one that has lots of opportunity to trade. And when we go look at the option chain, we can see that I'm just looking at the nearest one here, 30 to 40 cents, 15 to 30 cents. That's a little wide, but it's not bad. They're within 10 to 15 cents. I'll go out another week here. 90 cents to $1.10, 45 to 60. So although it could be a little closer, this is actually a good candidate. You probably take your mid prices and trade some positions around them. It's important to note that when you're looking at liquidity, you're really looking at how close your bid and ask spreads are, rather than your total open interest, because this will change and build and go up and down as expiration cycles start to come and go. So not a super lot of activity in terms of open interest yet, as this is new, but you can see that even here, we're about 15 cents wide. So you're going to want to use limit orders here and probably look at when you're looking at putting things in as spreads to make sure that you kind of get the prices you want. But this is probably about the limit in terms of what you're going to be wanting to be trading. Anything wider than 20 cents or so, you're starting to give up too much, and you're going to want to wait until that particular security maybe trades a little bit better.